Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On Tuesday, the Australian dollar maintained a negative tone. Nevertheless, the bounce from the support area of 64.80 has provided somewhat cushion and furthermore maybe a possible rise up towards 65.5, and with the key level still waiting for the challenge at 66 figure 30, which is aligned with the 60-day simple moving average. In light of the greenback, the market still remains somewhat weak as it consolidates around 103.78. I feel the further weakness is likely to emerge when all eyes look towards this week's US Federal Reserve Chairman Jerome Powell when he's scheduled for his semi-annual testimonies to Congress on Wednesday and Thursday. Eyes will also be on the release of the February jobs report as well in the US, while in Australia the GDP update and in China the CPI and PPI data release on Friday. But the key event is the non-farm payrolls, which is likely to be the more of the side of market moving potential, and particularly if the job gains exceed the expected 190,000 figure, which may signal ongoing inflationary pressure and impacting market sentiment, and also the Fed policy expectations and maybe seeing a rate cut in June. But there's still speculation we may see one in May. So still keep an eye on the key data because it will play an important role. During the euro, it currently remains stable and still focused on that key level of 108.80. I feel there could be a break there, which would see a further rise on towards 109.35.40. Any pullback likely to be shallow with the support seen at 108.05.15. Dollar yen experiencing a somewhat bearish bias, as we can see with the technicals breaking down, does anticipate the market looking towards a level of 149.85 and down to 149.5. A break there would see further weakness on towards the region of 148.80 or even where the base is outlined here somewhere around 148. As you can see, the upside challenges has hesitated towards that 150, 60, 70, and I do feel this will continue on as a pattern. The ball's still holding when it comes to sterling, and we can see the level of 127.15.25 nearly contested and maybe even eventually being broken. But keep an eye on this divergence because if it does strengthen, we may see a possible pullback and some profit taking where the support's seen somewhere around 126.5, 126 figure. Overall, or broadly speaking, I still feel the market is likely to take on the challenge to 127.80 and reassess from this top side as a lot of profit was taken from this region and good supply and may do or may repeat this pattern again. Well, gold fever or the gold rush continues as the market rallies on and hits the blow off top around 21.40 and pulls back rather sharpish. We are extremely overbought and the ADX is overheating, as we can see here. So we could see a pullback to somewhere around 2,118 to about 2,100 figure 2 area. From a broader call, we shouldn't rule out another upside test, but we are somewhat overextended to the top side. So the market may find some profit taking now coming into play here. Wrapping up with oil, the weakness comes back into play here after the recent breach above that 78.5. Nevertheless, the inverted head and shoulders is still intact and still holding to an 81.83 target. So therefore, the pullback is likely to be shallow around $77 a barrel or the base holding around 76 figure 40. That's a wrap. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the day.